Hello, everybody, and welcome back. This is Steven, and we're going to do another technical analysis session today. But first, and most importantly, happy holidays. I hope that everyone has family, friends, and a cold beverage around. What better time early in the morning or late at night when everyone's asleep to get better at our technical analysis and check some charts out. This week, we're looking at Vitality Biopharma, VBIO, on the OTC. Out of the USA, out of California, their headquarters are in Los Angeles. They're going to have a big year coming up. They actually do prodrugs of cannabinoids. One of the big problems with cannabinoids, most of you know, really low bioavailability. They're so lipophilic. So prodrugs is a really nice strategy, one that I'm excited to watch the company try to achieve next year. They don't have any drugs yet. They don't have any revenue streams. Their pipeline is just starting. They have some early clinical trials in the first and second half of 2019. We're talking dose escalation, phase 1, maybe even starting phase 2 trials. So really early on. But let's see what the pricing chart is looking like. Let's click on over. You'll see we're looking at VIBO on the OTC. Again, we're using our Heikin-Ashi, which is really easy to see, nice trends up and down. And we're going to continue building on our moving average trend. Today we're looking at Kelltner Channels, which are really cool. It's an envelope signal, similar to Bollinger Bands or others that we've looked at, but envelope because it envelopes the pricing line, the pricing chart, all of our candlesticks. And so what are we looking at? The center line, you'll see there are three lines. The center line is a moving average. It's actually the high, low, and close divided by 3, the average of that. And usually for 10 days. You'll see we're looking at 20 here. The upper is then the highs minus the lows, a 10-day average of highs minus lows, and the lower is the inverse of that. So you can see similar ideas to Bollinger Bands, but not based on the standard deviation, now based on differences in highs and lows for a 10 or 20-day average. Very easy to go around and change the settings on these if you want to change them from 10 to 20 days. The length of time is very easy. Range, true range, and a lot of sources. I like to keep it on close, but find the one that works for you. So a common strategy with Kelltner Channels is to buy or sell when they move outside of their 10-day averages. So either the resistance or the support. Usually the upper channel line is called the resistance line, and the bottom one is the support line. So when prices, let's scroll back a little bit, when prices go beyond that bottom support line, it's a trigger to buy. So see what happened at this point, right when we did that, huge gains. The inverse scenario, once prices get above the upper channel line, it's a signal to sell. So they did that here. You would see we would have missed out on a lot of that, but eventually captured it in the sell here. Similarly above, trigger to sell, signal to sell, and the gains were there for whoever took that market. Again, bouncing back. So you'll see the idea of moving averages appears again and again in a lot of these technical indicators. And moving averages are our friend, right? Math is our friend. So remember, identify the trend and then use different time frames and use different indicators. And once you feel confident, don't be afraid to act. Thank you very much. Happy holidays, everyone. From everyone here at Cannin to your family, happy technical trading.